keen to have your report back, so I will start with my immediate right. Gard, if you could start off the report back. Well, we'll go from one then. Miriam.
Thank you. So I would like to thank the members of my enthusiastic group. So we spent a lot of time on addressing the first question related to the country-driven process, and the members of the group which recommend more interventions at the country level through enhancing the capacity building of institutions and the country-driven process steps, how to access funds, enhancing horizontal coordination through the JCF NDA, and also the engagement of all stakeholders on proposing and identifying a project, ownership, institutionalizing the knowledge and experiences, and the sharing experiences from the other entities, sustaining national expertises and the knowledge sharing. Also we point that the importance of the role played by the NDA on prioritizing the project to be submitted to the funds by the NIAID or the accredited entity, identifying the potential national direct access entity who can meet the JCF or the other funds requirements. And at the defense level, we propose to simplify procedures as already done, increasing the JCF readiness gap, also ensuring sharing experiences by organizing regional workshops, webinars, or maybe papers, engage and link between adaptation projects and development of these projects, and increase capacity to process projects within the Secretariat. So with regards to the second question, the groups came up with the following proposition regarding the involvement of private sector. Next slide, please. Okay, so we propose to raise awareness of private sector so as to show them how they can benefit from the process and receive awards. Engaging national dialogues in the national level by the NDA, encouraging private sectors, and also promoting public-private partnership, involving financial ministry, and also the NDA could play a role on encouraging financial institutions like banks to be accredited. And finally, exploring how to develop a legal framework to involve the private sector. Thank you.
Thank you very much, Miriam. I think we can probably see some low-hanging fruits from some of the recommendations at the country level, but some which will certainly require some more detailed technical work. I now pass the floor on to Espen.
Thank you. At the outset, may I just make a small advertisement that the presentation that I made will be updated on the website so that you will get the slides that were invisible. I also want to thank the participants in Group 2. We discussed quite a few issues, but we started off that the simplified procedures as they're currently being considered is really not sufficient for particularly small island states, and that capacity supplementation, targeted capacity support is what we probably need to be looking at. We discussed the problem of having big delays in the disbursement process, and that in this regard the procedures that the funds have versus the procedures of the accredited entities, that this needs to be sorted out. The decision-making process at the level of the funds probably will require additional personnel. We should begin to put emphasis on involving the private sector in adaptation, because we've seen very much that the private sector is really only interested in mitigation projects that have a financial return to them, rather than an adaptation project which will be safeguarding their investment over a longer period of time, but doesn't give you any return on that. We do need to have lots and lots of delivery partners when countries go and seek readiness funds to do the various processes, be it accreditation or developing a project pipeline, that there is a need to have, it's not just about the money, but also to have the right delivery partners. The accreditation process is still too lengthy, but hopefully that will change over time. It's also a challenge particularly for smaller countries to find the right accredited entity to work with to develop proposals, either through a lack of understanding of the situation in the country or the size of the project. This is particularly the case for Pacific small islands. And as mentioned, it's easier to get the private sector engaged and funding mitigation activities as opposed to adaptation. Oh, what happened now? In terms of some of the actions and next steps, having a coordination process at the national level, particularly of donors that are working in the region, was seen as very important. We also had the point about engaging the private sector in some way, so the suggestions from the previous group fairly resonates with what we discussed. When policies are changed at the level of the funds, it's very important that these are communicated well, so that they can be well understood by the accredited entities. We looked at what incentives could be developed by national governments in order to incentivize private sector engagement, and there were some suggestions along those lines about working with the financial sector to get the right tools and products out there. We talked about insurance and investment guarantees and so forth. I learned something new today, that there is something called FinTech, financial technical, I forget the last part of it, but FinTech for adaptation was the shorthand for that. Finally, before we finished, we did discuss a bit about language barriers, and it is a challenge for countries where English is not the first or even the second language to work with the funds. But we were assured that the language capacities of the fund are increasing and improving. Thank you.
Thank you, Espen. And now Amy.
Hi, everyone. Just for Breakout Group 3, thanks to the participants. We had a small but very talkative group, which meant we could do a deep dive onto a few of the issues that were that we touched upon. So on the first question about the how to access to funds, we talked through quite a few of the challenges that exist, mainly centering around capacity within recipient countries and their NIEs and staffing levels and just general levels of awareness. And at the fund level, the cumbersome accreditation and project approval processes were also pointed to as a barrier to overcome. And it was noted that there's a lot of talk about supporting entities seeking accreditation, but a need to recognise that a lot of the smaller national entities have a much different challenge to face than when you're talking about the MDBs and other larger organisations, and their challenges are in a whole different ballgame. And so the capacity building support that's out there needs to be better targeted and more responsive to the different needs. The options that we canvassed, there were a few, but a couple we touched on included whether it was better for countries to use existing regional entities than trying to focus their limited resources on gaining direct accreditation. And we talked a bit about the Pacific, where you've got regional organisations such as SPREP accredited, and the pros and cons, because it was also recognised it's important for countries to build capacity themselves and not become overly reliant on larger organisations. You know, it's a long game we're talking about here. And there was also an interesting discussion around whether you had to have one department or government ministry that was your NIE or NDA, and whether there could be a better approach if the GCF was more flexible in allowing the government of country X, for example, to be accredited. And Belize, we learned a lot about their really useful oversight committee, which includes a range of government departments and private sector reps, and would have the ability to perhaps play that role. And then on the second question about private investment, again, we started out with the bad, the challenges, and obviously risk for investment was up front, but there was a couple of concrete examples touched on, including in the agricultural sector in Ethiopia, for example, and lack of property rights certainty, and the inability or lack of desire for small farmers to want to take long-term investments when they didn't know if they would actually be around to or have the ability to benefit from them, and the high transaction costs for SMEs as it's a cross-cutting issue. Some solutions on the private investments space were across the board regulatory environment improvements, including facilitation actions that can be taken by governments and incentives, which Group 2 also touched on. And we talked through as well about everyone seems to focus on the private sector from an outward-looking basis. How can you get multinational companies and you know the private sector that's out there to invest in the needs in our country, when actually the bulk of the money and the opportunities often come from the smaller local investors. And so and particularly when you're talking about SIDS in other countries with small economies, you can focus on all that money out there, but actually you may get better bang for your buck from focusing internally. And talked again about the role of a regional approach to leverage finance at scale. In the Caribbean it happens, and also the Pacific. So there's a couple of things to consider there. Thanks.
How much, Amy? And now, Gard.
Yes. Okay. Yeah, thank you. I think also our group, we benefited from the good sessions we had earlier today. I know many valuable points that we sort of built further on. The first we discussed was, of course, the differences in accreditation to different funds, and that there is still work to be done there. I think that was also highlighted by John Hofmeister from the GCF, how with these different funds that there are different standards and rules, and that's sort of a good way to start in order to try to do as much as you can in order to reduce the burden of countries. We also talked about not just being fixated on accessing these multilateral funds. There are also other access to funding that one should keep in mind and also focus on, so that you sort of, I thought this section, of course, was to a large degree focused on the multilateral funds, but of course also national, regional funding that has also different objectives, probably just on climate change, but there are also funding to access there. As others have highlighted, when you engage with partners, it's very important that you actually develop build on their national systems and their own institutional capacity, so that is something that is, you have capacity that is sustained, and that is something that you can use is durable. We talked about that it's the multilateral funds is much more than just readiness, and so countries would need assistance through the whole cycle, the whole project cycle, and keeping that in mind. We, I think we merged some of the private sector points here too, but I'll just skip those two and then get to the private sector afterwards. We talk about the cap for countries. You know, there was some different understandings I heard about that cap, but I think for our group, we'd had a large representatives from the small island states. They felt that this is a good idea because you ensure that money is at least spread out to a number of countries, and that ensures a more equal distribution. But of course, for others, there are issues with the cap. Just like Amy said for the last in her breakout group, we also talked about how for many smaller countries, governments should be the national implementing agencies because it makes more sense. But I think that was the example from Belize also. So there's differences here in terms of how big the countries is. I think then the private sector points, I think if I move to the question 2. So we had a lot of, as I said, representatives from the small island states, and the first step is probably there, so enhancing the engagement of private sector and promoting that continued dialogue and communication and just understanding better what the private sector can do, what private sector finance is, different instruments they use, and how to incentivize them. And then we talked briefly about NDCs, how that's also something that has come forward, that many of the NDCs were developed in quite in a hurry in order to be able to repair them before we came to Paris. So I think a further sort of going into the NDCs and see what part of the NDCs are more suitable for private sector finance, which sectors are more suitable for private sector finance, and doing sort of a little bit of an extra round and digging into those to better make them attract private climate finance. Yes, thank you.
Thank you very much to our facilitators. I think we can certainly applaud their work in trying to capture what we in our various group discuss. I would like to open the floor for any further points that you may wish to raise in terms of questions or comments. Sylvia?
Just a clarification for the breakup group 4, because I noticed that there was the first point about the different accreditation between GCF and IF. I just want to point out that there has been a study, a board paper actually, run by the IF with, of course, with in complementarity with the GCF about these gaps. And we actually have not found many gaps. There are not many. The only gaps that are of relevance are probably in the legal status and how we assess the legal status, and also in the environmental and social and in gender with regard to the commitments and grievance mechanism. Small gaps. So, and also what I just wanted to reassure is that there is a constant cooperation between the two accreditation teams to ensure that we can try to help and facilitate the country as much as possible.
Thank you very much, Sylvia. Do I see any further requests from the floor? Yes, please, go ahead.
Yeah, I'd like to comment on group 2. We talked about fintech, and I just wanted to add to that. That means financial technology. It's basically innovative financial instruments that the investment sector comes up with. And this is a new trend in banking, and it goes beyond retail banking, and basically coming up with financial products that suit different situations. So what we discussed in the group was that adaptation, since the benefits come in the future, an insurance scheme would be able to finance adaptation measures, but maybe through this new fintech trend, there could be instruments developed that could finance adaptation today that will pay off in the future. Just to elaborate on that point.
Thank you very much. I don't see any further requests for the floor. I wonder if our facilitators would wish an opportunity to reflect on any of the points made or any of the points made by the other facilitators. But I think we've had a fairly good discussion, and we are pretty tight on time. I think we've certainly heard the value of the accreditation process for access. We've recognized the challenges that come with accreditation. Some of those challenges will have to be assessed at the country level, but in terms of what we can do at the international level, there are other ways in which perhaps we can look at overcoming challenges. Sylvia just indicated what the Adaptation Fund Board had done in terms of trying to help countries along the way. Capacity is key, coordination is key. But in addition to all of these, I think there's a lot more that can be said for engaging between the funds and the country to get a better understanding of the context within which these approaches for accreditation occur. Espen made the point, accreditation is not an end in itself. There's much more that goes beyond when we're talking about access. There's a lot more in terms of capacity that needs to be developed, and readiness programs need to go beyond just the accreditation, but throughout the project cycle. Thank you very much. I'd like to give a round of applause to our facilitators, and now we move on to our final section.